Starbucks shares dropped by 14% only in one session due to bad quarterly results. At the moment, the stock is approaching its lower lows with a minus 40% from the all-time high. Is Starbucks an opportunity, or is better to stay away from this company? This is what we will try to figure out in this video. In my opinion, we are in front of a good opportunity, guys, because as I always try to do is analyzing a company, looking at the numbers, and not try to listen my feelings, my gut feelings, let's say. Okay, and in this case, okay, we didn't have a great quarter because we went from 9 billion of sales to 8.56 billion. Okay, also the net income went from 1 billion to 77.2 million. Okay, so yeah, fair enough, not great numbers, but talking about annual results, the trend is clear to me. We have a growing company, both for sales and net income. And this is why, if we calculate the fair value, the intrinsic value of the company, we have a very interesting result using every calculation method we have on Forecaster. So on average, we are talking about a company which is undervalued by 127%. Let's go a little bit deeper, because we can analyze the solidity of the company. And thanks to the Z-score, the Altman Z-score, we can see the company risk of bankruptcy. And we are talking about a company which at the moment has no risk of bankruptcy, because we have a 3.08 Altman Z-score, which is, as you can see here in the info box, in a safe zone. Okay, we never had big problem. We never had big problem with this company, even in the COVID year. Look, so we are talking about a solid company. Talking about the Piotrowski score, we have a 9, which is something great. Talking about this score, which can be from 0 to 9. So we have a very important 9. Also about the Piotrowski score, I made a video, which is here. Look, in the video page on the Forecaster.biz website. Very interesting, because this is a ratio that really can beat the market. And Benisham score, we are in a safe zone, because this company is unlikely to be manipulating its earnings. So we are in front of a safe company, a solid company. So let's go and see the value generation. Very good news for shareholders. The number of shares decreased in the last years, okay? And this means that if you were a shareholder, you got value from this company, because they made buyback during their entire life. And look, this chart, which is very nice, very nice. The efficiency of the company grew year by year. Look, every year the company is growing its efficiency. Okay, it's very interesting. We are talking a company which is growing, because we see the number here. Okay, it's undervalued, it's solid, and it's very efficient, because look, year by year they are growing their efficiency. Perfect. Something really interesting, I think really that Starbucks can be the new McDonald's for coffee, let's say, because something really interesting, guys, is this. They are increasing their licensed stores. Look, they started in 2020 with a 9% of the sales made by licensed stores, and now and today we are close to we are more than 12%. So even this part is growing, and I really think that this company can grow a lot. So is it time to buy?
If you like this video, I invite you to try the Forecaster terminal. You can try our software for free. You can find the link in the description. I also invite you to join our weekly webinar. It's free, and every week we share our best trading and investment ideas. You can find the link in the description too.
Let's see. Overbought, oversold, guys. We can see something interesting. Big investor are buying this company. Look, the shares are going down, but the buying pressure is growing. Look, we have the Wyckoff indicator, which is growing while the prices are falling. It's a very strong sign that investors are buying. Okay? Very strong signal. Let's go to the seasonality in order to understand if it's time to buy the share now. And what we can see is something really interesting, guys, because look, we are in a moment, in a period which can lead to lower lows, because we highlighted this part. And if we go here, we can see that in this specific time frame, in these specific dates, it's more probably we have a downward trend, okay? Because in the last 20 years, in this specific period, we had an average return of 7.65%. And in the last 10 years, in this specific period, we had a downward trend, a negative period in the 60% of times, okay, with an average return of 6.3%, okay. So if I have to put an entry order, a buy order on this stock, which is something I did in the last days, okay, my idea is to put a buy limit order here at $70 per share is my buy limit order, okay? Because everything using the forecaster tell me that it's the stock can go a little bit lower in the next 2 months, okay? But fundamentally speaking, in my opinion, we are in front of a huge opportunity. I would like to remember, guys, that if you go to the ranking page and, for example, we go to the S&P 500 and we click to best to worst, here Starbucks is the number 12. So it's a very interesting company, but we also have other 11 companies which are very, very interesting, okay? We talked about some of these companies. For example, we talked about Nike, we talked about Adobe, Johnson & Johnson. But in the next webinar, we will talk also about the other good company we can find all around the globe, guys, because from today you can also have all the European indexes, the Nikkei, we have also the Australian index. You can really stay all the night long to see the best stocks. For example, if you like France, you can find that LVMH is the best company in Spain. I bought it many months ago. You know why? Because it's undervalued. It's very undervalued. And few months ago, we had a situation like the one we have now on Starbucks. Because look, we had a huge drop. We had a lower low compared to the previous one, and then boom, the stock started to grow. It's a very good idea, in my opinion, once we are in front of a solid company, an underrated company, to get inside when the company on the stock market register a lower low.